Welcome to the Opportunity Zones podcast. I'm Jimmy Atkinson, and joining the show today is Zane Beadles, Vice President at Mercatus Partners, which is a private real estate investment company that specializes in multifamily acquisition and development. Zane is joining us today from Newport Beach, California. Zane, how you doing? And welcome to the podcast.
I'm good. Thanks, Jimmy. It's good to be here. I appreciate it.
Absolutely, Zane. Good to have you on the show today. So to start us off, who is Mercatus Partners exactly? Can you tell us about who you guys are and what kind of work you do in the Opportunity Zone space and a little bit about your business model?
Sure. Yeah. Mercatus Partners is a young company. We're a little over 3 years old. We were started as a partnership with a multiple family office, a registered investment advisory group, to really act as the direct real estate investment arm of that company. So anytime that group allocates funds toward a private real estate investment for their clients, that money comes to us to invest on their behalf, which is a great relationship for us to have. We just recently started going outside of that network to source investment capital, and want to grow that and offer our services to others outside of that group. It's been interesting. It's been a lot of fun. My partner comes from the institutional LP space, and we work with some of the best sponsors and developers across the country. We just enter those projects now on a different side of the capital stack. Instead of writing 30, 40, $50 million LP checks from his previous group, we write $2 to $5 million checks as a co-GP partner on projects, which has been a great benefit for our investors in our commingled funds. We run 2 conventional commingled funds so far and 2 Opportunity Zone funds. And like I said, that really acts as our co-GP capital. So we're able to come in early with those sponsors and developers. We mitigate some of that GP risk by working with who we feel like is the best groups that will get projects done on time and on budget. They'll be able to source LP capital. They'll be able to source debt, which gives our clients a boost. They get to participate on a little bit of that carried interest when a project does well, and then gives us a good pipeline. So that's our fund side of things. But this our business model, we call it kind of a triangle of mutually beneficial relationships. We have our funds and our clients that come through those funds, again, get to participate on the GP side of the capital stack, get to realize some better returns when those projects do well. We also will syndicate or raise LP equity for certain projects, and really the projects that our partners like the best, the ones that they want to hold longer term, that they don't want to be at the mercy of an institutional LP when push comes to shove, and they get some more control over projects. And so that allows us to go out to single family offices or high net worth individuals that want to pick and choose their deals, and now they get access to deals that normally would only be going to institutions. So that's another benefit for those people. And then for the sponsors and developers that we work with, by us coming in and helping out with their co-investment piece on that co-GP side of it, they get to spread their money around to more projects and do more deals. And then again, for the project that they like the best, we can help them source LP capital from longer term minded private investors, particularly on the OZ side of things. These projects are 10-year projects to realize all the benefits. A lot of institutions don't really care about tax implications or worried about the gains that they may have, which can handcuff a project, particularly that long of a project. So again, benefits everybody because it's flexible, longer term, longer mindset capital, and everybody sees the benefit in that business model.
Yeah, there are some big benefits to Opportunity Zones in general, big tax benefits and big social impact benefits. And now you're extending that to the benefits of this particular type of business model that you have in this triangle, and those 3 sides of the triangle being, correct me if I'm wrong, but the co-GP share of things, which are the investors in your fund, which are typically your very high net worth family office clients as part of your multifamily office. And then you have a second set of investors, which are single family offices and other high net worth investors coming in LP equity, and then the third side of the triangle being the developers and the sponsors of the projects that you do a thorough job of vetting so as to minimize that co-GP risk that you're carrying. Did I summarize that all right?
That's it, Jimmy. You got it. One other thing that I'll say is, those two, the capital in our funds, and then the capital that we go out and syndicate or raise for LP on particular projects. Those can get crossed up too. Those are kind of commingled. We give our investors in our funds kind of the first look at projects that we syndicate or that we raise the LP on as well. Give them a head start to kind of raise their hand. So that's another benefit for our fund investors, that they get a pipeline of projects that if they want to allocate more to a particular project, they'll have that opportunity.
Got it. That makes sense. Well, I want to come back to Mercatus Partners and learn a little bit more about your fund and the locations that you like in a moment, but wanted to back up and get a little bit of background on you, Zane. If I understand, this is your second career, real estate investing. So you can tell us a little bit about your background, what your first career was all about, and how you got involved with real estate and opportunity zones.
Sure. Yeah. So my undergrad's actually in mechanical engineering. I thought I was going to be Tony Stark when I grew up and live that kind of lifestyle. But I also played football in college, and through that college career, gained some good following and had the opportunity to go on and play professionally. So I've actually never worked as an engineer. I got drafted out of college and went on and played 9 years in the NFL. For the Broncos, Jaguars, 49ers, and Falcons across those 9 years. All the while through that football career, knew that business was the direction I wanted to go when I was done. I wasn't totally certain, but I liked the private investment world. And talking to some of my friends that were working for Lockheed Martin or Boeing or some of these companies that I had envisioned myself, sitting in their cubicles working on a bolt for a bomb for 3 months, didn't sound as fun to me as it originally did when I envisioned being Tony Stark. So again, knew I wanted to get in the business world. When I retired, I went back and got an MBA just to kind of expose myself to different areas of business. Confirmed that the private investment world is where I wanted to go. And through that, I had always been interested in real estate. Love real estate in general. I started out as an LP investor in commingled funds. When I retired, I did a few projects myself, some small vacation rentals, small, 2 to 3 unit, multifamily, rehabbing projects and renting them out. So I had done some smaller projects on my own, but knew this is the space that I wanted to get into. And, coming up on 3 years now in the space, just loving the direction and very happy with how things have transitioned for me.
Got it. So you're working on very small deals when you first started doing real estate investing yourself, and now you're working on much larger deals and syndicating or allocating a lot of capital at the same time as well. What about opportunity zones? When did you first learn about opportunity zones? Maybe either you personally or as a firm, however you want to answer that question. When did you make that transition into opportunity zones?
Yeah.
Why,
So I had been exposed to it in the late 20 teens, like most people. I was involved as an LP in a project myself, that much of it was in an opportunity zone. And the phases that were not in the opportunity zone sold off. And that was my first time investing in an OZ project, was taking some of those gains and rolling them into some new land and some new projects associated with that project. As a firm, Mercatus Partners, OZ was not something that we necessarily set out to do. It was a solution for a few of our families that are associated with the multiple family office that we work with. And they had some qualified gains that they wanted to take advantage of the OZ program. So we started a QOF for them. It was 3 or 4 investors, and it ended up being just under a $10 million fund. And we went and invested that 10 million across 3 projects for that first fund. 2 of them we still hold. One of them, obviously, the business plan was to hold for 10 years, but we got an offer on a small development in Salt Lake City that we built and leased up and operated for about a year, and just could not pass up the offer that we got on that. So we actually sold that project here just a few months ago. But again, that was our first foray. We're on to our second OZ fund now. It's still open for commitment and investment. We're at about $20 million in commitments to that project, and that project has closed on 5 projects so far, and we have 2 or 3 others in the pipeline right now. This has become a big piece of our business, while us not having, really set out for it to be. I think we'll get into kind of OZ in general, which will kind of explain why that has taken place. But, I think it's a great program, and the projects that we've been able to get into have just been phenomenal so far. So excited
Yeah,
about
well,
the business.
Yeah, I'm excited about your business as well. And I'm glad we have you on the podcast today, especially if you're going to be doing more work in opportunity zones. Always great to meet and get back together with folks doing opportunity zone deals all over the country. Tell me more about the fund that's open right now, what you can tell me about it. You mentioned it's got 5 projects currently closed. You're working on a couple of others in the pipeline. What asset types are you doing construction on? I mentioned in the intro that you guys specialize in multifamily, so I imagine the vast majority, if not all of it, is multifamily. And then also, which locations are you focused on? Why do you like those locations?
Absolutely. So this project, those 5 projects that I mentioned that we closed on in that fund so far, all of them are in the Tampa Bay area. 4 of them being in downtown Tampa, and then 1 of them being in downtown St. Petersburg, just across the bay there. Tampa is one of our target markets. Has seen huge growth, huge run up in rents over the past couple years, and thankfully so, because some of our development projects may not have penciled had rents not kept pace with the costs of materials and construction these last couple of years. But the majority of those are multifamily. The St. Pete project is a 19-story multifamily high-rise with some ground floor retail. The projects in Tampa are 2 large mid-rise, 300+ unit mid-rise projects. A smaller kind of workforce multifamily project will be around 100 units or so. And then actually the 5th project in that fund is a exciting, pretty cool redevelopment of an old historic warehouse that will become kind of food and beverage retail concept with some office over the top. This project in Tampa, we're part of the general partnership of a 30-acre master plan. That we already are started construction on the first phase, which is a 317 unit multifamily project. And then these next 4 that are in our OZ fund here are following Q3, Q4 of next year is where we're anticipating starting construction on those. But that warehouse is going to be really cool. It's going to be the heart of this master plan, big area to gather people. There'll be a public park across the street. So this area is going to completely transform. It's in the historic Ybor City neighborhood of Tampa, which is very culturally diverse and just has this character and history to it that can't be replicated. So we're very excited about how this one will come to be. And then you asked about where we focus on in general within our business. We invest across the country, again with top tier developers and sponsors as our partners most of the time. We do some small projects ourselves, just direct, but the majority of our stuff we partner with. But we have 5 main target markets, and it's really, not much different than what a lot of people talk about in multifamily industry. High growth, high in migration, good job stories, low regulatory, low tax, but particularly high quality of life. We want all those pieces, but then we want a market that has extra reasons for young professionals that are really the target market for our urban infill multifamily projects. And those 5 markets for us are Salt Lake City in the west, and then Nashville, Charlotte, Raleigh, North Carolina, and Tampa in the east. So we focus on those markets and try to have the majority of our investments be there. But for the right story or for the right partner, we do invest outside of those markets as well.
Sure. So talking more about markets and locations, is there any different consideration given to OZ project location compared to conventional project location for you?
Yeah, so we try to be very diligent and vigilant on that location. We're very location based anyway. We start with the market, but then we drill down even further, and we're very selective in the micro location within our markets as well. Looking at OZ, I think landowners saw the potential of their OZ parcels, and land prices reflect that. So I think land prices can be a little bit more expensive for OZ projects, but we are very focused on not doing OZ projects that don't stand on their own. We don't want to do an OZ project just because it's OZ and there's tax benefits and those sort of things. We want to do a project that is just a great project, and then the OZ benefits, not only for the community but then for the investors and the tax deferral and the no cap gain tax at the end of 10 years. All those sort of things are just kind of the cherry on top. Again, we're very hyper focused on location. If the location of an OZ project is not already great, we need to be confident in the path of growth and see that this project or that this location is going to transform over the next 10 years. Obviously, OZ being 10-year holds are very long-term focused. So we do consider that when we evaluate a location, but we need to be able to see that path very clearly for us to feel comfortable and be good with a project moving forward. And then one of our kind of anecdotal or unofficial ways of evaluating a location is we go walk it ourselves always. We get a feel for it multiple times during the day and during the week, and really we want to have a project that we feel like, okay, would one of our mid to late 20 female renters feel comfortable walking around this location at night? And if the answer is yes to that question, I think we can feel pretty good about that location.
Yeah, I think that's a pretty good rule of thumb to keep in mind when you're doing site selection. Can you talk about some of the deals that you may have passed on, what you didn't like about them? You mentioned before you're not just going to do an OZ deal just because it can be an OZ deal.
Yep. No, yeah. One of them particularly that comes to mind is a recent one we passed on in Long Beach, California. Long Beach has some fairly good OZ areas, but it's really block by block, and we were working with a partner that had this site under contract, and go visit the location. And it was crazy, really. 1 block to the west, and you're on a great street that has a great feel to it. 1 block to the east, and you're kind of in a transit corridor right next to a light rail station, which normally would both be great things. But it was kind of weird, just like right in this micro location. There's a lot of parking lots, and it felt like you were a mile away from all that stuff. And there was potential for path of growth. There's a master plan, a big redevelopment that's going on just to the south of this site, that really made us take pause and dig deep and make sure that we're understanding the potential of this site. But we couldn't get comfortable with the fact that we were very confident that this project to the south that would transform the area for us would be able to get built. just regulatory entitlements, things of that sort, and then just the current economic climate that we're in and the uncertainty moving forward right now, we just couldn't get comfortable with it. So, we ultimately took a pass on that deal for those reasons. But those things are kind of long and hard, and we have to take some very good time and really reflect on that. Because it had the potential to be a great project, but again, that location piece for us just came down to it, and we're just like, you know what, we talk about this all the time, and we need to have conviction in our location, and we just can't get there on this one, so we need to take a pass.
Good. I wanted to revisit the Tampa projects that you're working on in your open OZ fund at the moment. A couple questions there. I guess I'll start with the warehouse that you're taking over. It sounds like that's one of the few projects that's not going to be ground up construction. What are you doing with that warehouse exactly? Are you transforming it into a different type of property, or is it going to remain a warehouse, or what's happening to that one exactly?
The facade will remain. It's cool red brick. Anybody that has been or seen Ybor City, it's a very cool place. It's this red brick, wrought iron balconies. Ybor City was one of the first Cuban settlements in the Americas. It had a number of Spanish and Irish factory workers. It became the center of cigar manufacturing for a number of years. So just a ton of history and a really cool feel to it. And like I said, this warehouse is red brick with kind of Spanish Cuban style architecture. So we're not going to change the feel of it. We want to expand on that, and just bring it new life. Right now, the plan is to do about 200,000 square feet of office over the top of that warehouse, over the top of the portion of the warehouse. And then a portion of the warehouse will be redeveloped to food and beverage retail concept. Kind of think of kind of like a food hall type experience. We'll be having a trolley stop go in basically right in front of the warehouse. We're working on a community park just across the street that will kind of be the center of this master plan that we're involved in. And this food hall, food and beverage retail concept. We've got pedestrian paseos between projects, and so it's going to be a really activated, walkable location that it's going to have office for really become that 18-hour location with bodies living there and live, work, play type environment.
Sure. I also want to talk with you about one thing you mentioned a few minutes ago, is that, the point of your OZ projects is to create impact in the communities and also impact for your investors, right? So I want to get back to that impact for the communities part. Oftentimes opportunity zones are thought of as impact investments. And I'm not trying to make the claim that you're trying to say that you're an impact investor or that your investors have any sort of impact investing mandate. But the fact of the matter is, these are equity investments, capital investments in communities that are typically underinvested in oftentimes. How do you view opportunity zones in that light? And what kind of impact are you creating in these communities?
Yeah. I think it has taken some time for the Opportunity Zone program to prove out the intention and kind of show the impact that it's having. But I think you're starting to see that. Thinking this Tampa project again for us. Ybor City in the early 1900s was this thriving location that had great culture and great feel and was a place, a tight-knit community, and through the middle of the century kind of fell into some disrepair and kind of really changed as a location. It's always been an entertainment district, but it's hasn't been a place where people live or work really. There just hasn't been that concentration of people or office space, and the desire from people to live there or from companies to locate there. So, this particular project is going to really revitalize Ybor City. I'm not going to say we'll return it to its former glory, because it was what it was, and you can't replicate that. What I will say is I think that it will revitalize and bring a new phase to the area, and hopefully for many years moving forward. These types of projects, not only do they create jobs through the construction, through the redevelopment, but it can be a good thing for the people living in the area. Like I said, we're going to provide housing in an area that hasn't had housing for a long time, which is a big deal. We voluntarily as well on these projects set aside 5% of our units as affordable units. That wasn't a requirement for us, but again, OZ and having a project of this scale and size, we wanted to show that that was a consideration, and it's important for the workers that are working in the area, or working in our retail, our office, all those things, that it's important for there to be housing for those people as well. So I think that's a lot of the good things that can come from it. Obviously, the tax benefits and things of that from investors are a big deal, and probably the biggest catalyst. I don't think anybody can deny that or would refute that. So obviously, those benefits are self-explanatory, but I think people can feel good about the fact that they are transforming neighborhoods that otherwise may not see those investment dollars, and realize the positive impact that comes with it.
Yeah, agreed 100%. Well, in our last few minutes here on the podcast today, Zane, I wanted to get your general thoughts on opportunity zones, and how specifically do you view the brief history of opportunity zones as it's unfolded over the past several years, and how do you feel about the space now and where we're headed?
Yeah, no, I think again, it was a bipartisan piece of legislation. I think everybody got on board with the potential that this program could the impact that it could have into the future. I think it was tough early on. The way the legislation was written left a lot of doubt or uncertainty across many things, and I think what that did is it took some time for this program to really gain some momentum. For us, working with consultants that we deem to be experts in the OZ space, I think it took them a few years to really get comfortable and have conviction in the advice that they were giving. Not understanding how the IRS was going to view a certain aspect of it, or just some uncertainties around timing, and just all the different pieces that you have to deal with in OZ and manage. I think it took them some time to get comfortable with it, which in turn trickled down to groups like us, sponsors, developers, investment groups. Couldn't really have the conviction and the full comfortability, because the consultants that we were working with didn't have the conviction and the comfortability. I think you've seen that really start to change over the last 18 to 24 months. And then not only, individual investors learning about the program and understanding that this is an option for them, and what the benefits could be for them. But again, the comfortability and the knowledge, being able to give solid advice and have conviction in that advice for investors. I think it just took some time, but I think, again, over the last 18 to 24 months, you've seen a lot of momentum, not only because of these pieces and the understanding of the program and the benefits of it, and making sure that, you're comfortable and know that you are in alignment with the requirements. But there's been a lot of gains over the last couple years as well, which even further, I think, added gas to the OZ fire, if you will. And So, I'm excited about where the project or the legislation is at now, and the potential of the platform to move forward. I know there's a bill in both the Senate and the House now to extend the program by a couple years. I think the understanding is that it took some time for this thing to ramp up and get going, but I think everybody's really starting to see the benefits now on all sides of it, and so I hope that legislation gets passed. By the like you mentioned, by the time this podcast airs, that may have changed. It may have already passed at that time. But again, it's bipartisan, and I hope it even goes further than just the 2 years they're looking to extend it right now. Real estate's a long-term, long mindset game. And I think this legislation, could be very beneficial for cities and opportunity zones far into the future, with the momentum that it's gained thus far.
Yeah, well said, Zane. Couldn't have said it better myself. And yeah, for our listeners and viewers, we are recording this episode in mid-December, so I'm not sure when this is going to air. If it's either going to air toward the end of this year, or the beginning of 2023, but it's possible by the time it airs, as Zane mentioned, that the legislation will have already passed. Hopefully it does.
So. Yeah.
But if it doesn't, maybe it's right around the corner sometime in 2023. If given that momentum that Opportunity Zones has over the last, you characterized it as 18 to 24 months, I think, and especially if the legislation gets passed, and hopefully that's the first step in the process for this program getting extended over and over again, and maybe being made permanent, or at least semi-permanent at some point down the road. How do you feel that momentum will impact what you guys are doing, your efforts in Opportunity Zones, as we head into the new year and beyond?
I think it will just further our conviction in the program, and continue to build that side of the business for us. When that happens, and people see this bipartisan support for it, again, I think the comfortability and the knowledge of this being an option for investors just continues to expand. And I think you'll have more and more people seeking these types of projects out. And I think most people in the real estate world know it's really hard to make projects pencil that aren't Class A projects. There's definitely some different avenues you can have out there to mitigate some of the costs and make projects pencil that aren't that way. But again, the long term here, and the housing shortage that we have in this country, I think this legislation has the potential to really help alleviate some of those issues and concerns. And again, long term, these 10-year projects, they turn into that workforce housing eventually. So the long-term impact, it just starts to compound on itself. So again, I'm right there with you. I hope that this continues to get to be extended, and having it be a permanent piece of legislation would be great as well.
Yeah, that would be great. We just got to keep calling our senators and congressmen and telling them why it's important, and hopefully the message gets through and this thing gets passed sooner rather than later. Well, Zane, we're almost out of time. I mentioned that we are recording this mid-December. We're coming up on the end of the year. Your alma mater, Utah, is headed to the Rose Bowl. You and I are both big college football fans. What do you think about Utah in the Rose Bowl game, heading back for a second year in a row, this time up against Penn State? How are you feeling about that?
Very excited. This season, I had huge expectations for Utah coming into the year. Stubbed our toes a few times, unfortunately, and the playoff, the college football playoff, was not an option, and it wasn't even looking like the Rose Bowl was going to be an option. We kind of backed our way into the Pac-12 championship game with some fortuitous events. But in that game, had a phenomenal game against USC. Really just beat them down, which was fun to see. And I'm excited to see what Utah does. Last year against Ohio State in the Rose Bowl was a phenomenal game with a poor outcome for the Utes. So I'm hoping that they can turn things around this year and get the program's first Rose Bowl win in history. Would be phenomenal to see.
Absolutely. Well, good luck to you and the Utes, of course. And one more question before we go, Zane. If we have any listeners or viewers out there who maybe they want to talk Utah football with you, or they want to learn more about Mercatus Partners, what's their best avenue for reaching out and learning more about you and Mercatus?
Yeah, I'm on LinkedIn, Zane Beatles on LinkedIn. Our website, you can gain some information about our company on the website, mercatuspartners.com. And then my email as well, zane@mercatuspartners.com. Happy to have a conversation with anybody that's just wants to talk shop. Or anybody that's looking for OZ opportunities. We like I said, we have a good solid pipeline that we're excited about. So happy to have those conversations.
Terrific. And of course, as always, for my listeners and viewers out there, I will have show notes available for today's episode. You can find those show notes at opportunitydb.com/podcast. And there I'll have links to all of the resources that Zane and I discussed on today's show. I'll make sure to link to Zane's email address, LinkedIn, and the Mercatus Partners website as well. And please also be sure to subscribe to us on YouTube or your favorite podcast listening platform to always get the latest episodes. Zane, again, pleasure speaking with you today. Great to meet you. Thanks so much for joining.
Absolutely. Thank you, Jimmy. It was a pleasure. Hopefully somebody, even if they just get one bit of information from today that helps them make good decisions, then today's a success. So again, thank you.
Absolutely. Thank you, Zane.